Good morning. I'm Joe Brusuela, Senior Economist at Bloomberg LP with your Bloomberg Economic Brief Morning Cup of Joe. Today we've got earnings and jobless claims in focus. This morning we're going to get Q1 earnings releases from ExxonMobil, PepsiCo, Bristol-Myers Squibb, Royal Dutch Shell, and Dow Chemical. Now it's been over 2 days since we saw Apple just rip the cover off of the earnings ball, and we're going to see if investors still have that enthusiasm despite what's acknowledged to be a loss of momentum in the economy in the end of March and as we proceed into the second quarter of 2012. Now, I want to turn and discuss jobless claims. Now, jobless claims are a very noisy series, and indeed I expect to see some of the seasonal distortions that we've observed in the data over the last couple weeks dissipate, and I do expect claims to fall a bit, probably back towards somewhere between the 13-week moving average of 370 and the 4-week moving average of 374, 750. Now, in the jobless claim series, we are seeing a pattern evolve. We've seen this over the last couple years where jobless claims improve through the first part of the year, move sideways early in the spring, and then begin to decline. What we're seeing this year matches up with that in general, and despite the seasonal variation over the last couple weeks, the trend has been upward. The trend has been upward in jobless claims, meaning that claims are actually rising and firings are actually increasing a bit. And indeed, we've seen that in all three major consumer sentiment surveys. Now, in yesterday's FOMC presser by Ben Bernanke, at the very end of the Q&A, he did mention something that stood out for me, and I think you all should go back and take a look at it. He said that the Federal Reserve is well aware of the seasonal problems in terms of the collection of the data, primarily due to the shock the economy received back in 2008, 2007, and 2008. Now, for those of you who do read the Bloomberg brief on a regular occasion, know that we've addressed that topic, and indeed, I do think that we're likely to see an increasing pace in firings in the economy, and I do expect to see a slower pace in terms of hiring through mid-year, probably somewhere between 125 and 175,000. Now, does that mean the economy is falling back into recession? No, it doesn't. But it does mean that the economy is likely growing somewhere between 2 and 2.5%, with a little bit of a bias towards that 2% rate in the second and third quarters of the year. I'm Joe Brusuelas, and that's been your Bloomberg Economic Brief Morning Cup of Joe.